Hi everyone, thanks for joining me once more. Today we're going to dive deep into the strategic analysis and overview of Woolworths Holdings, or as we affectionately know them as Woolies, based on their year ended June 2025, the end of June 2025. And this is information that's publicly available on their website for investors, by the way. So I just download those documents and then I do my analysis. Now, before you get your checks booked out, let me point out some of the fine print on the bottom of these slides and analysis. This is my own independent analysis, by the way. Woolworths didn't hire me to say this. And more importantly, this is not financial advice, ladies and gentlemen. I'm just a fan of retail strategy and business, by the way, and their chuckles. So who exactly are we dealing with here? Let's maybe take some time to think about that. So it's easy to think of Woolies, by the way, just as this little place where you buy your avos that actually ripen at the correct time, and then we love them because they've got this quality and they last long. But they've been around since 1931. Think about that. That's nearly a century of heritage. So what's interesting is their identity. Their core purpose is adding quality to life. And honestly, if you've ever worn their bamboo socks or maybe gone through some of the clothing that they have, you kind of get what they mean. Structure-wise, it's not just South Africa, by the way. They have two major giants here, Woolworths South Africa. This is the engine room, which is food, fashion, beauty, and home. Country Road Group, this is their cool cousin overseas. It's in Australia. It's a portfolio of brands like Country Road, Witchery, Politics, based in Australia and New Zealand. So it's really a tale of two continents if you look at it. So when we look at the business and operating model, the best way to describe what Woolworths is about and how they actually generate revenue, we'll be looking at how does the machine actually work. It's not magic, it's a specific operating model that was designed by managers. They use what's called the 6 capitals, but I like to think of that as a recipe or some kind of an ingredients. Look at the inputs on the left-hand side, for example. They take money, buildings, data, and over 40,000 employees, by the way. They run it through their value drivers. The value drivers in the middle, and the big one here is the good business journey. This isn't just a poster on the wall for them. It's baked into how they source cotton and how they farm chickens, for example. They are obsessed with quality, especially in food. The outcome, ideally, it's high quality products for us and returns for shareholders. It's a premium model. They aren't trying to be the cheapest. They are trying to be the most responsible and the highest quality. On the product groups and strategic business units, let's break down by what they actually sell. And we have 3 main buckets here. First one, Woolworths Food. If you're a South African, you know this brand. It's a holy grail. It's mostly their own private label stuff. Their target market, who was the people who care about what they eat and are willing to pay premium for freshness and ethics, of course. Then we have fashion, beauty, and home. This has been a tricky child in the past, but it's finding its feet. It's about quality basics. Think of the t-shirt that doesn't shrink after one wash, including the shirt that I'm wearing now, by the way. And lastly, they've got the Country Road Group. This is a house of brands. It's premium lifestyle gear. If you're in Australia, this is where you shop if you want to look sharp for a weekend in Melbourne. So yeah, I have bought a few items, I must say, from that business unit as well. It's good stuff, Human capital and wellness. Let's look at the people elements of the business. Now, I want to pause here because this slide makes me genuinely excited and happy. Retail is tough, right? But look at these numbers. They employ over 40,000 people, but it's in the Just Wage initiative on the right that you should focus on, ladies and gentlemen. While many companies are cutting back, Woolies launched private medical insurance for 24,000 of their store staff and truckers. That is practically unheard of in the retail sector. They also pay significantly above minimum wage, by the way. Why does this matter to us analysts? Because happy, healthy staff treats customers better. I'm sure you agree with me on that. It's a strategic investment in service, not just a charity cost. Now let's look at the numbers, financial performance. Okay, let's look at the scorecard. How did they actually do in 2025? We'll call it 2025. It's a financial year. And well, it's a bit of a mixed bag for them. Look at the top line. Turnover is up 6.1%. They sold more stuff, which is great, by the way. 81 billion is a huge number, as you can imagine. But look at the red arrows below. Operating profit dropped 13%. And you might ask yourself why. Well, selling more doesn't help if your costs go up faster than your prices in that financial year. So if you have to mark things down, for example, to clear stock, their margin slipped from 7.6 to 6.2. It's not a disaster. They still made 2.46 billion in profit, but it shows it was a tough year to squeeze out efficiency. On the mergers and acquisition, which is something that I always include when I'm doing an analysis of an organization, because that's where we learn strategic moves, strategic decisions, and options by management, by executives. So let's look what they've done. To shaken things up, they made some big moves this year. On the buy side, they bought Absolute Pets. This is brilliant. The pet parent economy is booming. People treat their dogs like children. Woolies bought 93% of this company to plug into their ecosystem. Expect to see fancy dog treats next to your Woolies checkout soon. On the sell side, they sold the Bourke Street property in Australia. This was just a smart landlord move. They sold the building for 2.6 billion rand, took the cash and brought it back home to pay off debt. It's basically decluttering the house to free up cash. Companies do that from time to time when they sell these non-core assets, to focus on the core delivery. Now, let's look at the challenges. So why did the profit drop? It wasn't just bad luck, ladies and gentlemen. It was 3 specific headaches that they faced in the financial year. The CRG's restructure. They tried to fix the country road group structure. And like any renovation, it got messy before it started to get better. It disrupted operations. Fashion supply chain. In the first half of the year, they literally couldn't get stock on the shelves because they were messing around with the distribution centers in Midrand. You can't sell what you don't have. The economy, interest rates were high, then people are paying more for their mortgage. I mean, when people are paying more for their mortgage, for example, or vehicles, they buy fewer fancy jackets from the shop. But look at the actions. They didn't sit still. They finished the restructure and fixed the supply chain issues by the second half of the year. Now, let's look at the management actions to improve profitability of the organization. What are they doing to fix the profit margins going forward? The plan is optimize, invest, and grow. This is their strategy. The coolest part here is the RFID technology. For those who are not aware or don't know about this technology, these legal tags, they are putting them on everything in fashion. And the implications are that it means that they will know, or they know everywhere all the black t-shirts are in the country instantly. This reduces waste and markdowns, by the way. They are also pouring 1.7 billion into their food distribution center in Midrand. That is massive. That's a massive bet on food business continuing to grow. They are doubling down on their winner, which is the food business. Summary and peer context. So to wrap this up, what do we think about the organization Woolworths in the financial year that we just reviewed? How should we think about it? It was a tale of two halves. The first 6 months were rough, full of own goals, by the way, with their own supply chain. And the second 6 months showed strong recovery from, I think, executives and managers that know what they're doing. The verdict: the food is the beast. It's beating Spar and fighting hard against Checkers. It's the crown jewel. Fashion is recovering, by the way. Australia is cleaned up and ready to run. They have taken the pain this year and they set themselves for the next year for operations, which is this year. If you believe in the premium consumer coming back, Woolies is sitting in a very interesting spot, by the way. Thanks for listening, and let me know what you think on the comments. Cheers.